After contending with the exclusive surge in automobile prices and a global shortage of vehicles, car purchasers are on the brink of experiencing some relief this autumn. According to insights from automotive industry experts and data presented by Cox Automotive, there is currently an excess supply of vehicles, and numerous units will necessitate price reductions to facilitate sales during the final months of 2023. If you've been patiently awaiting price adjustments, we have the most recent updates concerning the brands that will encounter the most significant decreases, strategies for economizing on your upcoming car acquisition, as well as predictions regarding the automotive market predicament that all individuals in the United States should be aware of. Before proceeding, we kindly ask for your support by giving this video a thumbs up and make sure to subscribe to the Financial Scoop. The markets for both new and pre-owned cars have exhibited considerable volatility in the year 2023. In January, new car prices surged to unprecedented heights, surpassing the $50,000 threshold. Conversely, used cars began the year undergoing the most substantial price correction since the onset of the pandemic. However, in recent months, the fluctuations in prices have been even more notable. This pattern holds true for new vehicles as well. After reaching its peak nearly 9 months ago, the average cost of a new car has decreased by over $2,200. Experts suggest that the average retail prices might dip below the $45,000 mark by December. Meanwhile, predictions by J.P. Morgan estimate a 31% decrease in wholesale prices for used vehicles by the fourth quarter. On the retail front, this implies that the average price of a used car might drop by nearly $8,000 in comparison to the same period in 2022. Mike Jackson, the Executive Chairman of AutoNation, foresees a historic turning point that could lead to the most severe car market crash since at least 2008. He remarks that selling cars is becoming increasingly challenging, signaling an imminent decline in the automotive industry. Similar to other asset classes, the car market underwent a bubble due to an imbalance between supply and demand. Prices escalated by around 40% between 2021 and 2022. However, there's a limit to how much people can afford when purchasing a car. The ongoing trend is merely the inception of a downward trajectory, analogous to the trends observed in the real estate sector. The crisis is propelled by an oversupply of vehicles and dwindling demand, aggravated by high interest rates. Senior economist Jonathan Smoke, in a recent conference call, stated that price growth is poised to decelerate, and sales are anticipated to decline for the rest of the year. The market is now at a pivotal juncture, shifting toward equilibrium, which is likely to result in more foreseeable fluctuations in sales and fewer instances of substantial price hikes, Smoke explained. With each passing week, there is mounting evidence of across-the-board price reductions in the used car market. Industry experts note a significant drop in wholesale prices that dealers pay for vehicles, making it one of the most substantial declines in history. The figures, released by the Manheim Used Vehicle Value Index, a product of Cox Automotive's parent company, Kelley Blue Book, indicate that dealers are now paying 11.1% less for used cars. This represents the most considerable month-over-month decline since March 2008 and the second largest in U.S. history. Typically, when wholesale prices experience a decline, full retail prices follow suit about 6 to 8 weeks later. The delay in the appearance of price drops on car lots this year has been a bit more prolonged than usual, but they are now becoming evident. The average car payment has decreased by $109 since January. Experts point out that these reduced prices would be more noticeable if the current interest rates weren't as high. As supply chain challenges ease, bringing more inventory to dealerships, and demand stabilizes due to rising rates, wholesale used car prices could potentially plummet by 31.2% by the end of 2023, as projected by J.P. Morgan analysts. From January to May, used vehicle prices witnessed a 9.3% decrease, while from June to July, prices dropped over 3 times faster than in the first 5 months of the year. An additional 10.8% decrease is anticipated by the fourth quarter. Simultaneously, new cars are expected to lose up to 10% of their value this year, implying a 7% correction in the coming months, with an acceleration of this trend in early 2024. It's important to highlight that price drops will vary in degree across different market segments. While some models might experience drastic declines in value, more sought-after vehicles will likely see more modest price reductions. For example, in July, wholesale prices for sports cars dipped by 2.6%, while pickup trucks experienced a 6.5% decrease, and compact sedans saw a plunge of 15%. Cox Automotive recently released a list of brands facing major overstock issues, indicating that these brands will soon need to lower prices to adjust to the current market situation and move excess inventory off dealerships. The company noted that Ram, Dodge, and Chrysler have double the ideal supply of vehicles, and brands like Lincoln, Buick, Infiniti, and Jeep are almost twice the ideal supply. Brands such as Ford, Mini, Audi, and Genesis are also significantly overstocked at the moment. It's worth noting that much of the improved inventory consists of higher-end, well-optioned models. If you're considering purchasing a car in the coming months, here are some essential tips that could potentially save you thousands of dollars, according to money expert Clark Howard. Opting for domestic brands such as General Motors, Hyundai, Mazda, or Buick could be a more budget-friendly choice. These brands have been successful in building up inventory, potentially leading to more competitive pricing. Domestic brands might present opportunities for better deals, particularly if you're interested in vehicles with lower demand or if you're in a region where those vehicles aren't as popular. Remember that these predictions and tips are based on current market trends and conditions and might change over time. Howard Clark advises his clients that if they need to buy a vehicle promptly, expanding their search beyond the local market for the desired make and model can lead to substantial savings. By considering options from different regions, the potential difference can translate to thousands of dollars in savings. He also suggests that if you currently have a functioning vehicle and can postpone its replacement, waiting might be advantageous. Buyers should wait until automakers and dealers initiate wiser moves. Notably, several segments such as pickup trucks, convertibles, and coupes are undergoing significant corrections, trading below the average prices as of August 21st. This trend is expected to continue with the most substantial price drops occurring in those segments. The car market was characterized by manufacturers supplying dealers with high-end vehicles and numerous features to elevate the average vehicle price. This strategy caused the average costs of both new and used cars to surge since 2020. However, the landscape has shifted, and approximately 2 million unsold vehicles are currently in the dealer-manufacturer pipeline. Consequently, dealers are resorting to substantial discounts, moving away from their previous practice of adding fees. Amid the evolving landscape, the car industry must do more than endure the downturn. It must also navigate the changes that will follow. This includes shifts in consumer preferences and the push toward electric vehicles. Adapting to this changing terrain will require a different approach than in the past. While core principles such as managing inventory and cash remain vital, companies must also focus on growth to weather the storm. The uncertainty of the future, while beneficial for short-term car buyers, could lead to significant disruptions for manufacturers and dealers. The industry is in a phase of flux, which could bring both opportunities and challenges. Thank you all so much for watching, and please be sure to subscribe to our channel. We would greatly appreciate it.